Alright, real talk. You know that payday moment when you open your banking app and go, wait, that's it? You were supposed to make $4,000 this month, and only $2,847 showed up. Where'd the rest go? Lost in the mail? Boss forgot to carry the one? Yeah, no. Welcome to your paycheck, where the government takes a cut, your insurance takes a cut, and somehow you're wondering if it's time to pay rent and Monopoly money. Today we're decoding this mess line by line. Deep breath. Let's go. Welcome back to Paycheck to Progress. I'm Jenny, and today we're doing something truly wild, actually reading your pay stub. I know. Chaos. I know. Most of us skim the bottom number and do a tiny cry. But figuring out what all these deductions actually are? That's how you stop leaving money on the table. So grab your last pay stub, digital or paper, I don't judge, and let's finally see where your money's actually going. First up, gross pay. You know, the shiny number they dangled to hire you. We're offering you $60,000 a year. Sounds adorable. You did the math, $5,000 a month. So yeah, that $1,400 apartment? Totally doable, right? Maybe toss in decent Wi-Fi and a plant? Sure, until reality taps you on the shoulder. Smash cut, first paycheck, $3,200 after deductions. I'm sorry, what? Where did the rest of the pizza, money, go? Here's the part they never mention in the interview. Gross pay is what you earn before anyone else gets grabby. Picture a pizza party. 8 slices for everyone. By the time you arrive, half is mysteriously gone. Did it exist? Technically. Did you touch it? Absolutely not. That's gross pay in a nutshell. Net pay is the only number that actually lands in your account. Your take-home, the real world. And that gap between gross and net? That's where the fun happens. Not magic. More like legal pickpocketing. Cute, right? Pro tip. When someone asks what you make, they mean gross. When you're budgeting, you use net. Mix those up and boom, you've got a car payment future you cannot afford. Ask me how I know. Alright, first villain, federal income tax. Uncle Sam's cut. Supposedly for roads, schools, the military, and somehow those legendary $600 toilet seats. It's the patriotic donation they auto-enroll you in, whether you asked for it or not. And here's the extra annoying part. They don't just wait until the end of the year. Oh no. They skim a little from every single paycheck based on what they think you're going to owe. It's like your landlord saying, I think you might throw a party this year, so I'm taking an extra $100 a month, just in case. How much they take depends on that W-4 you filled out on day one. Yeah, the confusing form you copied from a friend. Claim 0 dependents? They withhold more. Claim a bunch of dependents you don't have? Congrats. You get to write the IRS a check in April. Fun times. Here's the kicker. That money isn't gone forever. If they took too much, you get a refund. But a tax refund is not a gift. It's your cash you lent the government at 0% interest all year. They got to use it. You didn't. Meanwhile, your credit card was charging you 24%. The goal isn't a massive refund. The goal is to break even. Tweak your W-4 so you're not giving out free loans every year. We'll walk through the how in a future video. For now, just know that, yay, $2,000 refund isn't the win you think it is. Alright, next up, state income tax. Not every state plays this game. Hi, Texas and Florida. But if yours does? Yep, they're taking a slice too. It's usually smaller than federal, but it snowballs fast. California can tag you for 9 to 10% depending on income. New York's not kinder. And if you're thinking, I'll just move to a no-income tax state, cute. Those places make it back with higher property taxes, chunky sales taxes, or tolls on every road. You don't escape, you just swap the invoice. Some cities toss in a local income tax too, looking at you, New York City. So now it's federal, state, and local. It's the checkout screen of life. Service fee, convenience fee, processing fee, all for the same paycheck. And here's the kicker. They all calculate off your gross, not what's left after the last hit. Nobody's taking turns. Everyone's grabbing the same pie at once. It's a feeding frenzy, and you're the entree. Time for everyone's favorite mystery fee, FICA. That's the Federal Insurance Contributions Act. Translation, Social Security and Medicare taxes. It skims 7.65% off your paycheck, every single time. Breakdown time, 6.2% goes to Social Security, 1.45% goes to Medicare. And no, you cannot opt out. I don't care if you're 25 and convinced Social Security will be a myth by the time you retire, you're still paying. Here's the spicy part. Your employer also pays 7.65%. So together, 15.3% of wages go to FICA. The twist? Your employer writes their half off as a business expense. You just feel it. Social Security has a wage cap. 2024's is $168,600. Earn $200K? You only pay Social Security tax on the first $168,600. Medicare has no cap. You pay that 1.45% forever, and if you make over $200,000, tack on an extra 0.9%. Because make more, pay more. Sure. What really grinds my gears? We're paying into a system that might not be there for us. Social Security is projected to run out of money by 2034. We're funding our parents' retirement while ours is TBD. Cool. Cool, cool, cool. The tiny silver lining? It's money you've technically paid in, work 10 plus years, and you should qualify for Social Security benefits when you retire. If it still exists, big if. All right, now we're in the Choose Your Own Adventure section. Health insurance, dental, vision, life insurance, and yep, 401k contributions for future you. Your health insurance premium is probably the biggest bite after taxes. And yes, it's absurd that healthcare is tied to your job. Keep the job to stay healthy. Lose the job, lose the coverage, right when you need it most. Totally normal. Anyway, here's the kicker. You pay premiums and still have a deductible, co-pays, and co-insurance. So you're paying for the privilege of paying more when you actually need care. It's like a gym membership that charges extra every time you touch the treadmill. The 401k is the win. That's money future. You will actually thank you for. If your employer matches, contribute at least enough to grab all of it. That's free money. Do not leave it on the table. HSA and FSA contributions. Also good if you use them right. These are pre-tax accounts for medical expenses. Pre-tax means this money never gets taxed. Not now, not later. One of the few real perks we get. Use it. And then the extras. Short-term disability, long-term disability, life insurance, pet insurance. Yes, really. All the voluntary stuff. Some are worth it, some aren't. We'll sort the keepers in another video. Here's the headline. Your net pay is usually about 70 to 75% of your gross. Sometimes less if you live in a high-tax state and pick the Cadillac of health plans. Fun. So $60,000 a year gross? Realistically, you're taking home around $42,000 to $45,000. Monthly, that's about $3,500 to $3,750. That's the number you budget with, not the mythical $5,000. Why it matters? If you don't understand your pay stub, you can't optimize it. You won't adjust withholdings, won't snag your full 401k match, won't switch to an HSA to cut taxes. You'll just let it happen to you. Your pay stub is a map of where your money goes. Most people ignore it, glance at the bottom line, and move on. That's like never checking a receipt. Spoiler, something's probably off somewhere. Next video, we're hunting the $1,500 most people leave on the table. Hello, 401k matching and HSAs. For now, do one thing. Pull your last pay stub. Actually read it. Track every single dollar. Because once you understand it, you can actually control it. Hit subscribe if you've ever stared at your paycheck and thought, this has to be a typo. Smash like, if FICA finally makes sense. Ish. And drop a comment. What's the chunkiest deduction on your stub? Misery loves company. See you next week. We're hunting down the $1,500 you're leaving on the table.